Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNO setup. I will talk about the general global markets and the trade setup. So let's start first with the SGX Nifty to give us an indication of how our trade will pan out. The SGX Nifty has moved up even higher. In the last show, we were talking about a gain of almost 4 points. It's up 17 points. ADR's HDFC Bank was up almost 1%. You had Tata Motors, which was up almost 0.8%. And you also had other companies, which Vedanta, which was down almost 2.2% as far as the ADR is concerned. Now, the big move probably came in Taro. Sun Pharma subsidiary Taro surged almost 15% overnight. Results came in before market hours yesterday, but this happened post the conference call that happened with the management. So strong numbers coming in from, strong commentary coming in from the Taro management. Let's take a look at how crude is trading. Crude is trading lower for the second session. Overnight, it was down almost 1% in trade. So the Brent crude is below the $65 barrel per mark, while WTI manages to stay above the $56.50 barrel per mark. As far as the other commodities are concerned, positive close by the base metals on the LME, except for aluminium. Most of the other stocks or other commodities as well. Copper, zinc and lead were up anywhere between 0.3% to 1%. Aluminium ended down over 1%. Even in China, what you're seeing is that aluminium is weak, but steel and rubber are trading very, very strong. Steel, in fact, is up, surged almost close to 3% now. Even here, aluminium is down almost 1.5%. So there is not enough traction that's coming in as far as aluminium is concerned. Gold is trading higher by almost 0.5% overnight. In morning trade, it is rather flat. Fund flows, FIIs were net sellers to the tune of almost 3,800 crores in the cash market. Sorry, DIs were net buyers to the tune of almost 3,000 crores in the cash market. So on a month-to-date basis, if you're looking at it, FIs have bought in almost 4,000 crores, and DIs also have turned net. There's net selling to the tune of 363 crores because of the big buying that happened yesterday. The sell figure has come off significantly. As far as what moved up, India VIX continues to inch higher. Was up another 2%. What did well was the pharma sector, IT sector, and media sector. What didn't do well, oil as well as metal didn't do well, and the PSU banks continue to slide lower. The Nifty was down almost 50 points. What contributed? Axis Bank, the board meeting is there tomorrow for fundraising. Asian Paints, TCS, Tech Mahindra, so IT and some of the defensive contributing. What didn't do well, Reliance continues to slide for the second day in a row, while the NBFC space as well as banking space, all of them contributed on the negative side. But Agam, what's the FNO scene like? Are we seeing put writings? Are we seeing call writing? I'm sorry.
Yes, we did see a lot of call writing, considering the fact that the Nifty came off to a certain extent, still defending the mark of 10,300. But when it comes to the changes in open interest in futures, not too much to be spoken about. So as you can see, very little change there. When it comes to the Nifty Bank, however, we have seen an increase of 1% in open interest towards, well, you could say fresh shorts for now. But the VIX, as Darshan was just talking about, has moved up higher, in fact inching the mark of 13.6. Now do remember, the next level to watch out for will be 14.5. Should the VIX go above that, it could lead to more volatility. And on the whole, when it comes to PCR, of course, naturally, given the fact that the Nifty has fallen, you also seen the PCR come off, now standing at around 1.36. Moving in terms of changes in open interest, well, we're looking at more writing in the 10,300 and the 10,400 calls. On the other hand, unwinding as expected, seen in the 10,400 put. But of course, we have a lot of changes when it comes to stocks. So we have Jet Airways moving into the band. On the other hand, Walkout moving out of the band, considering we have seen so much unwinding in yesterday's job trade. Of course, we'll be watching out for two counters. Bharti Airtel is one of them. We've seen fresh shots building up with the 24% increase in open interest, and Tata Motors, and we're expecting earnings there as well. We're also looking at fresh shots building there before its earnings. So we'll be watching out for that as well moving into today's job trade.
Stock of the day is Bombay Dyeing. Good show by the company for the quarter ended September 2017. Revenue has grown as much as 43% for this company at 692 crore as compared to a figure of nearly 485 crore that we've seen in the base quarter. If you look at the net profit, That's a good threefold jump there at 53 crore as compared, in fact, sorry, that's the net profit here, which is at a profit figure of 53 crore as compared to a loss of nearly 37 odd crore. If you look at the operating performance or the EBITDA, that's grown by threefolds at 153.2 crore as compared to a figure of nearly 49.07 crore seen in the base quarter. Margins have expanded at 22% as compared to 10.12%. So what goes behind the making of these good numbers? Well, first is the higher sales. Now, if you look at the growth in the high-yielding real estate business has led to a good top-line performance. Now, good top-line performance along with your operational efficiency has led to a jump in your profitability, or a good profits for that matter, in this quarter. If we're talking about the operational efficiencies, then the raw material cost is at play. That's, as a percentage to the net sales, has come down to nearly 39% as compared to 59% seen in the previous quarter. Impairment expense, which were playing out in the base quarter, has also led to this sharp up move that we've seen in the profitability of the company. Impairment expenses sum up to the worth of around 43 odd crore, which was seen in the base quarter. Employee expenses as a percent also to your net sales has reduced 3% as compared to a 5.5% figure that we've seen in the base quarter. Now, if you were just supposed to look at the revenue breakup of this company, then you would see that the retail business contributes to roughly around 9% of your overall sales. Polyester business contributes to nearly 45 odd crore, and real estate business is 46% of your overall sales. And shareholding pattern, that's in terms of 54% of your stake is really held by the promoters, while 46% of your stake is being held by public for that matter. With that, let's toss it over to Jayesh and Saloni for commodity and currency market updates.
Thanks for that, Nikki. Let's start off with the commodity space. Oil markets have seen some bit of uptick come about in the morning session after 2 days of decline. WTI is trading above the 56 mark, and Brent is still trading above the 63 mark. Another decline came in on account of surprise inventory buildup that we saw in the US. As per EIA, the crude inventory rose by 2.2 million barrels for the last week. Now, Citigroup has come out with a note which says OPEC is likely to disappoint oil bulls during the November meeting, so we'll be keeping a close watch on that one. Moving on to base metals, that saw some bit of positive bias on the LME, except for aluminium, which was down about 1%. Copper was trading higher on account of weaker dollar and bullish demand coming in. IWCC has come out with a note in which they say that global copper market may be in a deficit going into 2018, and hence the uptick. We're seeing similar cues come in for the Shanghai Futures Exchange, where most of the base metals are trading with a positive bias, with steel up about 2% and is trading at a 2-month high. Moving on to gold prices, we're seeing some bit of stability come about at the 1280 mark, which also happens to be very close to the 100-day moving average. But Saloni, moving on to the currency space, what cues are you picking up?
So, the rupee yesterday rebounded from 2-week low, and it ended marginally higher at 64.96 levels against the dollar. Now, the home currency opened weaker at 65.15 levels against the dollar. However, it washed out initial volatility and made a smart comeback during the day and ended 0.1% higher against the dollar. Now, most Asian currencies were trading mixed on the back of uncertainties about US tax reform policies and also because of rising crude oil prices. Now, coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Moving on to bond markets, the 10-year benchmark yield ended 1 basis point higher at 6.94%, its highest close in over 6 months. And lastly, global funds reduced their rupee debt holdings for the third consecutive session yesterday. They reduced their debt portfolio by approximately 550 crores according to NSDL data.
Well, to start off with, amongst the stocks that we are tracking is Reliance Infrastructure, which is slated to win bids or order of about 1,000 crores from the Nuclear Power Corporation of India. That's according to ET report. Now, NPC had opened bids for EPC tenders of the Kudankulam Nuclear Power Project on Tuesday, where Reliance Infrastructure was said to be the lowest bidder, beating L&T and Tata Projects. So keep an eye out for that name. That apart, we also have automaker Pricol, which has entered into an exclusive JV with Hong Kong-based Zorg Industries to make parking assistance systems. Now, under this JV, Zorg Industries will provide the technical expertise, whereas Pricol will be the manufacturing and distribution partner. Now, while the initial investment in the joint venture is said to be just 6.5 crores, Pricol has said that they are aiming to earn revenues of about 100 crores by FY20. That's under the JV, so watch out for that name. But you will also see earnings reaction coming in. That apart, HCL Infosystems, which has received a 312 crore tax demand notice, the company has said they will appeal to the authority. Apart from that, we are also tracking Cupid, which has received a supply contract worth 24 crores from the Ministry of Health. Now, this might not seem like a big number, but if you look at the FY17 revenues of Cupid, they stood at about 83 crores. So this is a sizable contract. Here again, you will see some earnings reaction as well. And lastly, we are also tracking PDS Multinational Fashions under a bulk deal where Purinju Veliat's PMS arm, that is Equity Intelligence, bought 0.9% stake yesterday. Now, PDS trades garments and has a market capitalization of 690 crores. So we could see some positive reaction there. So keep an eye out for all these names.
For Tata Motors, this time in the second quarter, we are expecting healthy performance coming in from JLR as the foreign exchange related losses narrow for the company. Of course, on a consolidated basis, the situation will be challenging, at least on the operating front, wherein we are not expecting good growth coming in. As far as the revenues are concerned, we are expecting the top line to be close to 68,900 crores, a growth of 5% year on year. EBITDA growth will be seen at 7% on an absolute basis. Margins more or less should remain stable on a year on year basis. However, profits should see a sharp jump because of one-off last year same quarter. Profits are expected to be 1,850 crores for the consolidated entity. But clearly, if you look at the standalone business, the losses there will continue. Brokerages are expecting a 600 to 650 crore kind of a loss for the standalone domestic business. Of course, because of the improvement in volumes, we could see some margin improvement for the standalone business. But the focus area clearly will be Jaguar Land Rover, and JLR revenues are expected to increase 6% for the quarter on a year-on-year basis. However, the EBITDA or the margin performance will be closely watched for. This time we are expecting the EBITDA margins to be close to 10.8%, improvement of 50 basis points year on year. And if you look at brokerages like Kotak and Nomura, most of them are expecting a foreign exchange loss of 350 to 450 million British pounds. So that is something important we'll be watching out for. Of course, the margin trend for JLR is something important everybody will be watching out for in the management commentary. On overall basis, expect a muted quarter for Tata Motors on a consolidated basis this time. Okay, the big nifty pharma company that will come out with numbers today will be Aurobindo Pharma. We are seeing a top line growth of almost 9%, profit growth of almost 13%, and an EBITDA growth of almost 14%, which will mean that margins will come in close to the 26% mark versus the 25% mark that we saw last time around. Mainly, if you're looking at some of the contributions and why this will happen, the US business is expected to be rather strong because of the contribution of Renvela. So there are two types of Renvela. One of them was the tablets, in which we are seeing anywhere between $30 to $35 million coming from these tablets, and the suspension, Renvela suspension, will be anywhere between $3 to $4 million that will come in because of the suspension of Renvela. The other markets are expected to be rather muted, EU as well as emerging markets. Pantoprazole was one of the key drugs in the US which saw a lot of shortage, which Aurobindo actually sold in, so that is something that is expected to boost the US revenues also. On the API front, it will remain flat on a year-on-year basis, but expect overall, because of the US business, when other companies are struggling to grow there in price pressure, Aurobindo is expected to put in a strong show this time around.
Hindustan Petroleum will be coming out with its numbers today. Now, on a standalone basis, it is expected to be a strong quarter for the oil marketing company. Though revenues would be marginally higher at 53,204 crore, net profit would be doubling to 1,996 crore. Now, EBITDA would rise by around 97% to 3,200 crore, while margins would expand by 300 basis points to 6% in the second quarter. Now, gross refining margin, that is the key number for an oil marketing company, is expected to come in at $9.7 per barrel versus $5.9 $89 per barrel in the last quarter. Now, the company is expecting inventory gains in this quarter versus inventory losses of more than 1,500 crore in the last quarter. Now, this is a sequentially strong quarter on the back of higher refining margins, inventory gains and strong volume trends for the company. Now, crude throughput is expected to be in the range of 4.3 to 4.7 million metric tons in this quarter, while marketing performance could be hit because of a digital discounts that the company had given and because of GST that was coming in this quarter. Now, petrol and diesel marketing margins were 2.4 rupees and 2.3 rupees per litre versus 1.7 and 1.6 rupees per litre in the last quarter. However, outlook on the gross refining margin would be a key thing to watch out for when it comes to HPCL results.
The Indian banking system is gearing up for a round of marathon meetings to be taken up in the later part of November and the early part of December. This is pertaining to the second list of stressed accounts that the RBI had sent to the bankers in August. These accounts, which there are about 30 or 40 of them in the second list, they are slightly smaller than the first list of 12 stressed assets which were sent to bankers for immediate action under the Insolvency and Bankruptcy Code. The bankers have time till the 13th of December to resolve these cases with the available restructuring tools, failing which all of these cases will automatically go to the NCLT for insolvency and bankruptcy proceedings. Now, what the bankers will be looking at is various tools that are available to them: SDR, the strategic debt restructuring tool, S4A, and even some form of deep restructuring wherein they sell some portion of the assets and restructure the remaining accounts. These are all available options, and they will be looking at these options so that they can resolve these cases outside the NCLT. Now, the NCLT as such is not shut off to the bankers till the 13th of December. They can go to this route if they feel that nothing else is working out. But typically the provisioning that is required for cases under the Insolvency and Bankruptcy Code is higher. Companies which go to this case, the bankers have to provide about 50% of the secured exposure in those companies and 100% of the unsecured exposure in those companies. So bankers are typically wary of going through the Insolvency and Bankruptcy Code. However, what is happening is the government has announced an over 2 lakh crore recapitalization exercise for the public sector bankers in India who control a large part of the debt that is in question. So they will be in a better position to negotiate and thereby write off some of the bad loans which may be discussed over these meetings.
Let's now look at some of the stocks that you should keep on your radar based on the delivery data coming in. Starting off with Axis Bank, the stock was up more than 3% yesterday, saw delivery buying in excess of 500%. The delivery volume was up nearly 3 times at 95 lakh shares as compared to the 10-day average. The total volume too surged about 26% at more than 2 crore shares versus the 10-day average. The second stock should be Rain Industries. The stock was up 5.5%, saw delivery buying in excess of 130 crores. The delivery volume was up nearly 8 times at 40 lakh shares versus the 10-day average, and the total volume more than doubled at about 2.26 crore shares versus the 10-day average. The last and final stock, Manappuram Finance, it was down 4% yesterday, saw delivery selling of about 150 crores. The delivery volume was up more than 3 times at 46 lakh shares versus the 10-day average, and the total volume too surged 18% at about 1 crore shares versus the 10-day average.
On the brokerages, first we have is Edelweiss initiating coverage on Lumax Industries. Now they have initiated buy rating with a target price of 2,560, which suggests a potential upside of 38%. Now the company is focused on cost reduction, process improvement, which would improve the company's profitability going forward. The company is also raising its revenue share from LED, which will lead to the top line growth and drive earnings for the company. Now the brokerage is expecting the share of LED in revenue to increase to 22% and 40% by financial year 2018 and 2020 from 5% in financial year 2017. They're also expecting the revenue and net profit to grow at a compounded annual growth rate of 16% and 35% over FY17 to FY20, and they're expecting the EBITDA and net profit margin to expand by 200 and 250 basis points by financial year 2020. Going forward, healthy auto demand, increasing premiumization in passenger vehicles, rising mix of LED and process improvement and cost efficiency would drive growth for the company. Second, we have is Credit Suisse focus on Arvind. Now they have maintained the outperform rating but have hiked the target price to 540 from 450. Now the second quarter for Arvind was muted on the textile front and brands did okay. So not much surprise coming in when it comes to result, but the company did announce that demerger plans. Now this demerger plans and the process of listing would take around 8 months and the 8 months for the company. Now the street is valuing the fashion business at premium while the textile business is being reasonably valued, which means that there will be a limited downside going forward according to Credit Suisse. Now going forward, they are also expecting continuous high revenue growth, expanding margins and re-rating, which can cause us a significant upside for the stock.
Now there's clearly a lot to talk about over the course of today with 3 nifty companies and also President Donald Trump's meeting and joint briefing with Xi Jinping. That's today. But here are a few stories that you can read on the website. That's bloombergquint.com. First up, you have the Aam Aadmi Party that has approached former Reserve Bank of India Governor Raghuram Rajan, offering him a Rajya Sabha seat. They might not nominate their own leaders to the upper house. The RBI's move to allow transfer of funds between rival mobile wallets that are compliant with Know Your Customer norms is a boon for Paytm as it weeds out the non-serious players in the payments industry. That's according to Chief Executive Officer Vijay Shekhar Sharma. He said that in an interview with Bloomberg Quint. Now, Apple is working on redesigned high-end iPads for as early as 2018, and those incorporate key iPhone X features such as slimmer edges and facial recognition, according to people who are familiar with the matter. Let's now listen in to Hadrian Mendonça of IIFL, who sees a downside of 100 to 150 points on the Nifty going ahead.
As end of the bull market. So actually overall, if you see, the overall trend continues to remain very strong for the Nifty and the Bank Nifty both. There is going to be, the selling pressure that we are seeing in the past 2-3 days. But such kind of days are going to act as pretty healthy one for the overall health of the markets. So profit booking, no doubt, is there. Weakness, no doubt, is there. I'm seeing another 100-150 points downside from here on. But from there on, one should, sit on cash and, try and buy the stocks that are actually trading at lower levels once we get that 100-150 points downside from here on.
Well, that was all you need to know going into trade today. Do read the copy on the website. That's all you need to know for a lot more information at your fingertips. Indian Open is up next, and this is Bloomberg Quint.